Hey, folks, good morning. Beautiful day in Florida today. I so wish I was at the beach. I'm going to flat out say that. It would be good. Veronica, good to see you on already. I'm sure you are multitasking. Sidrahar out in San Francisco, good morning, man. Glad to have you here. Everybody grab a cup of coffee. Make sure you click that share link. I'm doing it right now. Let your network know we're live, as I just did. There we go. Corey, oh, man. I am glad Corey's on this morning. Corey, this show is basically for you, dude. I don't know what else to say. You'll see as soon as we dive in why, okay? But Corey, if I could ever have done a show planned and wrapped around you, it would be this one today. Okay, folks, with that, let's jump in and get started. Good morning, everybody. Welcome to the 69th episode of FinTech Insider, the Breakfast Show US. I'm Sam Maule, Leblanc Invest Managing Director in North America, and I am your host for the show. As always, let us know where you're watching from in the world, okay? We will definitely give you a shout out. Let's see how many time zones we can possibly cover. Just between the producer of the show, myself, and our guest, we're covering from Copenhagen, London, Florida, and California, everybody. And that is a 9-hour swing when it comes to time zones. So let's stretch that out. Let us know where you're at in the world. We'll make sure to give you a shout out. Also, share the link. Please click on that share link down there. Let your network know you're watching this. Hit the like buttons and the emojis, and subscribe to LeblanFS on LinkedIn. And subscribe to LeblanFS, our podcast, FinTech Insider. So you can get that on Spotify, iTunes. You take your pick anywhere that you actually listen to, whatever your normal listening habits are. All right, let's kick off with 3 news stories from the past 24 hours that caught my attention and should catch yours. So this morning, the jobs report came out. CNBC reports the weekly jobless claims were lower than expected last week as workers slowly returned to their jobs in the wake of rising coronavirus cases. Claims for the week ending July 4th totaled 1.3 million compared with 1.39 million expected from economists surveyed by Dow Jones. The total marked a decrease of 99,000 from a week earlier, according to the Labor Department. The 4-week moving average of claims, which smooths volatility in the weekly numbers, fell 14,000 to 1.43 million. Continuing claims fell sharply, dropping almost 700,000 from a week earlier to 18.06 million. The previous week's total itself was revised down by 500,000. Wall Street had been expecting 18.9 million continuing claims, according to FactSet. Despite the better than expected numbers, this marked the 15th consecutive week that initial claims totaled above 1 million. Claims under the Pandemic and Unemployment Assistance Program also totaled 1.039 million, an increase of nearly 42,000 from the previous week. Second story is from Bloomberg. This one actually is pretty interesting, and we've been talking about this rather consistently on the show. Bloomberg reports COVID-19 is pushing New York City's affordable housing crisis to a breaking point. 2/3 of New Yorkers rent their homes, making it America's biggest rental market, and has always had a crazy kind of housing math. But when unemployment's soaring and the typical rent about twice the national average, the numbers no longer add up. A quarter, 25% of the city's apartment renters haven't paid rent since March, according to the Community Housing Improvement Program known as CHIP, a group that represents mostly landlords of rent-stabilized buildings. Some landlords with their own bills to pay are running out of savings, so the city is bracing for hundreds of millions of dollars in delinquent property tax payments. A new state law prohibits evictions of tenants who face financial hardships while social distancing rules are in effect. That could be a while, folks, maybe until there's a vaccine. For now, tenants who want to pay or want to stay put but no longer can afford the rent are trying to negotiate payment plans. Folks, I don't know what to say. I've said on this show repeatedly, and several of our guests have kind of agreed with me. The litmus test or the canary in the coal mine is August. I would say the entire month when it comes to what we're going to see as far as mortgages, what we're going to see on evictions for renters, what we're going to see on maybe a secondary shutdown. Hopefully we don't have to go through any of that. But again, with stimulus checks no longer going out, the extra $600 a month for unemployment, and the unemployment number staying north, this is a math problem, people. I mean, and usually math doesn't lie. All right, and finally, our last story is from American Banker. They report the Consumer Financial Protection Bureau completed a rule gutting limits on payday lenders. They're delivering a long-anticipated regulatory relief to the small dollar lending industry. The final rule, released Tuesday, rescinds underwriting requirements that had been imposed in 2017 regulation under former CFPB Director Richard Cordery. Eliminating the ability to repay standards has long been a policy goal of the Trump administration. The changes developed under the CFPB Director Kathy Kredinger are projected to save the payday lending industry more than $7 billion a year. But the new rule will face a likely legal challenge by consumer advocacy groups that argue that the agency did not follow the correct rulemaking procedures. We'll see. This one should be incredibly interesting, I think is a nice way to put it. Again, coupled with everything I was just talking about come August, we'll see what the actual hit is to consumers and the economy. And with that, let's bring in our guest today. Very excited to be joined by Patrick Sells. He's the Chief Innovation Officer at Quontic Bank. Did I say that right, Patrick?
Quantic.
Quontic? I like Quontic better because it gets me all the syllables. Quontic Bank. On today's show, we're going to talk about innovation that we've seen during the pandemic and how culture is important as technology really changes during times of pandemics. I think that's a nice way to put it. I want to compliment Patrick on absolutely the best background we've had yet. Where are you in the world, Patrick? Go ahead.
Thanks, Sam. I live in New York City, but I'm currently out in Del Mar, California, doing some work out here, enjoying the beach.
Yeah, you win. I thought the best view was Ryan Caldwell, who's the CEO of MX, with the mountains he had. You win. I'm just going to go ahead and say that today. I need to do a show live from the beach one of these times. So for those that don't know, Patrick was named Digital Banking of the Year by American Banker, our friends over there, which sounds cool, but it's really cool when you hear the whole story, right? We're not talking Chase. We're not talking Fifth Third. We're not talking Truist. We're talking about a bank that I'm going to go ahead and guess about 90% of you have never heard of. So let's start there, Patrick. Tell us a little bit about your bank, what your remit is, who your customers are.
Yeah, so Quontic's a federally chartered bank. We're based in New York City. Kind of two unique aspects about us is one, we have what's called the Cdfi designation from the Us Treasury. We got that in 2015, and that means we're focused on lending to low-income people. And so we primarily do that in the form of mortgages. We lent out about $400 million last year, and 60% of that at least has to be to low income in order to maintain the Cdfi designation. And then on the deposit side is really more on the digital bank aspect of what we're trying to do. Quantic was a one branch community bank, and our CEO, Steve, and I decided about 2 years ago, could we begin to redefine what a community bank looks like and make it a digital bank? And so we spent the last 2 years figuring that out, having a lot of fun, making a few mistakes.
I love that. And let's stress that again for everybody. We're going from a one branch community bank to a nationally recognized financial institution. It can be done. We've talked before. We've had Jill Castillo on as a guest, and she took, I think, 7 branches down to 1. And there you go. That model works. And obviously then, Patrick, that meant you had an extensive background in banking, right? Prior to joining?
Nope. I've been in the industry, I think, coming on 20 months now.
There you go.
And I think that's part of probably what's helped Steve and I. He also is not a banker in background. He's an entrepreneur, was in mortgages primarily. I was in marketing and technology. And so I think we're kind of able to come, unaware or almost ignorant of some of the no's in banking. And that gives us a bit more freedom to try and break shit.
I think it is. I actually agree with you. We were talking before we went live. I think it's actually, I don't know if simple is the word I want to use. It's easier at the scale and size you're at than trying to do this like at, Wells Fargo, right? Just the sheer overhead and the legacy and everything else they have with them. And I love the idea that you came from outside the industry. So I'm curious then, as you built your team, did you kind of do the same thing? Were you hiring outside the industry? Were you doing a mix? How did that work?
No, it's only, I can think of 1 or 2 people have come from outside the industry into banking. Everyone else is really, what you'd expect, lifelong bankers. I think one of the things we realized, though, it wasn't so much about trying to bring in outside people or even new technology. The culture at banking is what's broken, and that's actually where you need innovation. Yeah. And I think the industry has made innovation synonymous with technology. And if we go look at the definition of innovation, it just means to do something new, to do something different. And if you change the culture, the technology is all around us, and I think the bank will, absorb it much better. And so we focus much more on that. And I think it's worked well for lifelong bankers, giving them a fun place to work. Imagine that.
Yeah, everybody, you're not dreaming. This is an actual show. And we are talking about culture. We talk about this all the time. Everybody, let's raise a glass, by the way, for that statement. I couldn't agree with you more. Culture just wins. Culture triumphs. It's also incredibly hard to do, by the way.
It is.
I think it's something easy. It's something we talk about a lot. We talk about a lot of the 11FS. We talk about, yes, you got to have an innovative culture. You've got to really hold on to those core values and do all that. And that sounds really good. It's also incredibly hard. I think it helps. You talked a little bit about your CEO, and how in the world did he get you to come? I'm very curious. What was the winning argument that he gave you to make you want to go and do this, to come and join the bank?
So when I met Steve and Quantic, at first they were actually a client of my marketing agency in Indianapolis. And we'd spent about 6 months in that type of relationship. But Steve and I had built a friendship, and largely around cryptocurrency. We both had an interest in it, and neither one of us knew that much of it. And one day we decided we were going to build an Ethereum mining operation. And so we started, one of those cocktail days, and started assembling the rigs and doing that. And I think continued just to build a friendship and a vision for, could you make banking fun, right? And I was actually out visiting Quantic 2 summers ago, and decided to stay over Labor Day weekend in the Hamptons with them. And we were sitting at the pool, just dreaming about what if, and just realized I don't want to go back to Indiana. And I would end up living in New York for about a month, and had all my stuff boxed up and came out here. So I don't know if there really was a winning argument. It just kind of, I think, came naturally to us. We saw the vision. We both got excited and said, let's go do this.
Man, I love that type of story. And I think it is, I'm going to be honest, you had one of the winning components you have to have, which is leadership at the highest level, willing to do this and embrace it. I think, absolutely. Honestly, I think if it's lip service, you just might as well move on, folks, because it's not going to happen. I really do. And trust me, right now in banking, when it comes to digital and everything else, there's a lot of lip service around it. There's a lot of people that know all the good phrases. When it comes to actually doing the work and implementing the products and doing this, maybe not so much interest. So I was doing some reading before this. I like some of the innovation and some of the things that y'all introduced. So one of them that stood out to me was the Drawbridge savings account. Did I read this right? You launched that in 3 days?
Yeah.
What took so long? What was the problem, man?
Yeah, exactly. With the help of a great fintech partner in Maule, we were able to put that together. And that was in the early days, living in New York when COVID first started happening. We just saw what looked like decimation, taking place across so many of our customers' lives and in the city. And we thought, okay, how can we do something different to help? And also, what can America do? Most of us are stuck at home, right? Like, we don't know how to help. And at that time, COVID hadn't spread across America like it has today. But we thought, okay, let's make it. We know you can open a savings account in 3 minutes on your phone from anywhere in America. And so you can do that. You can get a high interest rate, and we'll match that with a donation to try to help, the people in New York City that were struggling. And fun project, and a fun kind of way of almost like the Tom's model, right, if you will, into banking. And it was fun to do it that quickly. I don't think anyone at Quantic had ever launched a product that fast before.
Yeah, if I'm reading this right, the account paid depositors what is it? 50% API, nearly 3 times the national average. I'm trying to read with my very small.
So basically, it's essentially a 1% savings account, and we split that half to the customer, half to someone, to the fund to give away.
I love that idea, and that gets back to knowing who your customers are, right? You mentioned this early on. Can you go back just one more time? Let's dive into who your typical customer is.
So it's different. I think a lot of banks, try to cross-sell, and that's not so much been our strategy up to this point, and I don't think it necessarily is going forward. On the lending side, we typically lend to a lot of employed immigrants, low income. On the deposit side, up to this point, as we kind of made this journey into being a digital bank, we did that largely through paying high interest savings accounts online. And so as a digital bank, surprisingly, our average depositor is probably in their 50s or 60s. It's actually not the millennial at this point. Now that will change.
Yeah.
That will
No,
change
I love
as
that.
we go forward.
You just made Ron Shevlin over at Forbes and Cornerstone happier than hell by saying that, because he argues that constantly. Argues it constantly. That's a sweet spot. You know, that's actually really good in my opinion.
Yeah. So I think I'd have to get the most updated numbers. The last time I looked, I think the average customer was like 58 years old.
Man, good. I mean, I love that. I absolutely love that concept, man. They got some comments over here. I gotta read because it just make me laugh. Andrew said, if you launch something in 3 days, you count hours. Like a baby, you count a newborn by weeks, the months, and then years. Yeah, so you shouldn't. Yeah, but 3 just sounds good, dude. Instead of saying 72 hours, 3 days. Just
3 days.
And one of my favorite quotes, and I'm trying to remember what startup founder had said this. I've used this in talks all the time. He said the advantage startups have is they can go from ideation to operation in the time it takes for a large organization to get a meeting set. And hell yeah, damn right, that's accurate. Just trying to balance the calendars of a million executives to get a collective decision made on something that really one person should have made the damn decision and move forward. So I'm guessing you guys operate like that.
Yes, that goes back to culture, right? Yep. And I think that is hard to change, and it just requires like a daily repetition. One of a quote I love is, your job is to be the chief reminder officer, right? You just got to keep hammering it. But two of our 4 core values that we picked, one is try it on, right? It's the idea like when you go into a department store, you just grab a shirt, try it on. If you don't like it, throw it away, move on, right? And progress, not perfection. I think especially in banking, there can be just this obsession with perfection, and that stands in the way of making a decision and finding out, did it work or not? And so you take those 2 ideas and you should be able to launch things pretty fast, because we're not trying to be perfect. We have to remind ourselves this, and employees often, it's okay to make a mistake. You're not being held to perfection. You're being held to, can we be in a constant state of progress? So
Corey Leblanc, I love Corey. Corey's a good friend of mine, works for Origin Bank down in Ruston, Louisiana, head innovation officer down there. He said, Patrick, coming from the non-bank world, how have you effectively changed the mindsets of traditional bankers to embrace the changes you've implemented? Also, how are you keeping the default resistance from creeping back into the organization? That second part's the important one, by the way. How do you stop it from coming back in?
I think for us, it's really going to be about that laser focus on culture. Can we continue to make Quantic a fun place to work? Can we make it feel fun? Do people want to come here and to fight that? Because it is true, it's creeping. I think the nature of banks is just kind of like, it's like quicksand, right? And if you take your eye off of that, we all fall into it and we'll get stuck, and it becomes hell, and it's not fun. I don't remember the first part of your question.
So the first part was, how did you effectively change their mindset? Not that Corey's facing this or anybody else in banking, but especially coming in from the non-bank world. I mean, I'll be blunt. I've been doing this for decades now, and there is always this, oh, great, it's the new kid, or it's the new whomever, right? Thank you for hiring a consultant. Thank you for bringing this guy in that's never done this and trying to get us to change. So how'd you overcome some of those barriers?
It definitely ran into that at first. Was kind of who's the new kid? You don't know banking, what's going on, and especially being 28 at the time, you really don't know shit about what's going on. But I think
wait, back up, everybody. You did catch that, right? Let's go ahead and get that over with. How old were you when you joined? 28.
28. Yeah, so 29. I was 27. 28, 29 now. I just got a notification my battery's got low. For some reason, the charger doesn't seem to be working. Let me switch the outlet real fast.
No, you're fine. 27 years old, everybody. So again, while he's mad scrambling to get his device charged, that's the part I love the most. So, and I get annoyed with this to no end when you're doing hiring, you're looking for talent, and saying you've got to have, 20, 30 years experience. You don't. What you do need to do is pair folks up and set them up so they don't have failure. So somebody like Patrick, when they come in, I give this analogy all the time. and I use it from my military days. When a submarine is coming into a port and going through a harbor, the captain of the submarine and the entire crew, they know that submarine inside and out. They know everything about it. What they don't know is that channel. They don't know that harbor. They don't know the currents. They don't know the environment. And you always have a harbor pilot who comes on and knows that. And you relinquish control to some degree to that harbor pilot to get you in. So it's that combination of folks that know something and know it so well, combined with SMEs and experts. Is that blend together is just perfection, and I love it.
Yeah, I think a couple of comments on that was interesting. Actually, as a marketing agency for 8-9 years, I really had sold into almost every industry but banking. Yeah. And I could never understand why, because it seemed like to me there was so much opportunity to do it differently. But I think now, being inside of a bank, I understand that you have to both know your craft, marketing, technology, whatever, and you have to understand banking and regulations. And that's a tough bridge from an outsider. But when I got in, what probably helped me build some of the trust that I needed was just being able to admit, like, I don't know what I'm doing. I don't know how this works, right? And like, I literally would try to take phone calls that were coming into the branch, right? How do I act like a teller? How do I go do this? How do I go do that? And just had to, I think, showing a willingness to say, it's not just about new fun ideas. Like, let me understand what goes on in your world. What does Reg DD mean? What does Reg E mean? Like, I don't even know what the regs, I don't even know how to spell that shit. And I think that helps build some trust. And I also think people want to have fun banking. They're just looking for someone who can actually back it up. And that was part of what we tried to do as well.
Yeah, and I think the willingness to learn, right, is incredibly essential. And you showed that when you came in, which is something we all have to do. We have to learn nonstop. I don't care what age or how long you've been doing this. Another great question. This one came in from Sidhar. Hey, Sidhar. He's a fintech founder out in San Francisco. He said, in a recent podcast, Patrick, you made a provocative statement that should get this audience ears burning. You said, why do fintechs exist? Why doesn't this get done inside a bank, perhaps, with a B2B marketplace for banks? Can you please elaborate?
Yes, that is a bit of a provocative statement. I like to make provocative statements. But I think, I don't know that this is true for all fintechs, but just a couple of observations and something I've been noodling on is the idea of a true digital bank. I think digital banking up to this point has been about how can a bank service a fintech, right? Yeah. And in other words, but the bank's still abdicating being a bank in that case, in many cases, I would argue. And so what happens if a bank could help other banks become digital in some way, right? And as opposed to some, banks, we build out a function, we build out a capability for ourselves, we can also sell that to other banks. Banks inherently will trust other banks. You're not going to be worried about what happens if that fintech goes away, or what happens if that guy, decides to quit or change his job. And so we've given up all of that. I also think part of it is very inefficient. You see these fintechs go raise all this money, and then they have to pay a big chunk of that money to a bank to have access to, the rails, to the ledger, to, cards. Yep. And it's like, that seems like a huge waste of money. Why doesn't the bank just incubate the fintech, right? And now you can still raise money in that, entity and use it to actually provide value for your customer. But I think, this kind of goes to another thing I've been thinking about is today there's a lot of talk that banks lack the technology we need. We're not innovative. The fintechs have beat us. And why is that? And I would argue that it's probably because 10 years ago, no young talent wanted to go into community banks or banks in general because the culture sucks. The benefits suck. There's nothing about it that's fun. So we went to companies that were cool, and guess what? They now have better technology. And we're not going to fix it today by trying to add Zelle or some technology to a bank, because 10 years from now, the talent of today is not going to come here. And some banks may be able to put a Band-Aid on this problem in the short term, but until as an industry, the reputation gets fixed, I think we actually face the greatest existential crisis the industry has faced, and that no talent wants to come here.
So everybody raise a glass as a toast, because we all 100% agree. I really should be drinking liquor this early in the morning, as I really should, because I drank too much last night. Should be. So I love one of the things you talked about is why shouldn't the innovation come within the bank? So for those that don't know, I'll give you an example of that. And I had to Google this while Patrick was talking, but Umpqua did that, for example. So Umpqua actually sold Pivotus Ventures to Coney. So here you go. You have a bank develop a fintech solution that they sold into the industry. It can happen. It flat out can happen. All right, Patrick, time for one last question before we have to wrap up. And I'd be curious to get your viewpoint on this. Because if you are 28, 29, this is really like that first massive crisis that you're going through. Obviously, you went through 2008 too, but we're seeing something with the pandemic, especially seeing that you live in New York, which has been fascinating, right? I talked about that story early on, where 25% of renters in New York haven't made paid rent since March. So we're seeing, I think COVID is a transformational event across so many verticals, right? Airlines are screwed. Sorry, I don't know what else to tell you guys. They're screwed. There's so many industries that are screwed. What would you look at? What would you say has been the biggest surprise for you within the banking sector coming out of COVID right now? Isn't that tough? That's tough, dude. Can't say contactless. I'm not giving you contactless. I'm not giving you digital banking. That's too easy. Come on, man.
I think the biggest thing and probably the best thing has been the understanding that you can work from home.
Thank you.
The way we work can actually be done differently. And
amazing. And you'll attract talent. Damn, people. Go ahead.
I mean, I don't think there could have been anything short of the OCC coming out and forcing banks to say, change how you use your office space, that could have ever gotten the industry to change. Right. And I think just in doing that, I've seen such a mind shift change in people working from home. How do you use technology? It's changing things. And I think that's probably been the most surprising and the best thing to happen for the industry in that regard.
I agree with you. And I think it will actually help attract some talent to come in, right? This concept that I don't have to go to Brooks Brothers, buy a suit, take the E-train in the middle of the summer wearing a fucking tie and
right. And it may not even be just about work from home, but I think what it did in the minds of board members and executives at a lot of banks was it changed a big assumption, and that may open up analogous thinking to say what other assumptions could be changed, right? And maybe it's not that bad.
Yeah, I 100% agree with you, and I love the point that you made at the board level, because that has been the biggest frustration I've had over the years. Is I can get to a middle tier layer or maybe one or two executives and get them excited, but if you couldn't get the board convinced that, oh my God, I remember trying to explain Uber to a board and being told how it was just going to crash and burn and it made no sense, right? And Airbnb, right? So I'm dating myself a little bit, but the concept of these and just having people go, never going to work, never going to work.
Yeah, so I think that there's a lot of good things happening and I think everyone kind of wants to do this. Is just about, can we create a conversation? I think the OCC wants innovation. They know we have to do it. Yep. I think bank boards know. I think employees in the world know. And can we get everyone to come together and actually allow for some of this change to take place and take back playing a meaningful role in society as banks and being a place that people are proud to go work at and help raise up America?
All right. So I already know Corey Leblanc wants to reach out to you. So how does he do that? For the folks that are watching and they want to get in contact with you, what's the best way?
Easiest thing is email psells@quonticbank.com or shoot me a text 765-506-8929.
There you go, guys. I love it when the phone number is given out, Corey. So I just made that easy for you, Corey. You don't have to ping me and ask. All right, everyone else, want to leave an important notice. I talked about this yesterday. Thanks. I mean, this has been fun. Like I said, tomorrow will be our 70th show. We're going to have Amanda Orson from Curve back on talking about, oh my God, the Herculean tasks that they did around the whole Wirecard debacle. And love Amanda and what she's able to do. So she'll be on tomorrow. That'll be our 70th episode. After that, we're going to move back to just once a week. So we'll be doing this every Wednesday at 10:30, same time, still here on LinkedIn. But we're going to kick it off that way because Alex won't let me use her room anymore. She's pissed at me. We're taking over her room every day. With that, though, we still need great guests. So you can reach out to me at Sam Maule on Twitter, sam@11fs.com. Hell, you can call me 904-304-5525. There you go, Patrick. That's the only phone number I know. I have no freaking clue what my home phone number is or my wife's. But that's mine. So you can reach out to me there, or you can reach out directly to the producers. So breakfastshow@11fs.com. Everybody, thanks a lot for being here. We'll see you tomorrow. Hey, Patrick, man, go learn how to surf, dude.
Yeah. Thanks, Sam. Great chatting today.
No, not a problem.